In July 2023, consumer prices in the U.S. increased by 5.4% from a year earlier, matching the largest jump since August 2008. This broke a 12-month streak of slowing inflation, which was largely due to a technicality in the calculation of yearly price gains. The core inflation, which excludes food and energy, rose by 4.3%, the highest rate since November 1991. The main drivers of inflation in July were rent, transportation services, and used cars and trucks. Rent increased by 0.4%, the largest monthly gain since June 2019, as the housing market remained tight amid low supply and high demand. Transportation services rose by 2.8%, reflecting higher airfares, car rentals, and taxi fares. Used cars and trucks surged by 10.5%, accounting for more than a third of the overall CPI increase. The Federal Reserve has maintained that the current inflation is transitory and largely driven by supply chain disruptions, pent-up demand, and base effects from the pandemic. The central bank has signaled that it will keep its easy monetary policy until the labor market recovers and inflation is moderately above its 2% target for some time. However, some economists and analysts have warned that inflation could be more persistent and damaging than expected, as wage pressures, consumer expectations, and global factors could keep prices elevated for longer. They have urged the Fed to taper its bond buying program sooner rather than later to prevent overheating the economy and eroding the purchasing power of consumers. Inflation is the general increase in the prices of goods and services over time. It reduces the purchasing power of money and erodes the value of savings. Inflation can have various causes, such as excessive money supply, high demand, supply shocks, or government policies. Inflation can affect businesses and consumers in different ways, depending on the type, rate, and duration of inflation. Some businesses and consumers may benefit from inflation, while others may suffer from it. Here are some examples of how inflation affects businesses and consumers, and some tips on how to deal with it. Cost-push inflation. This type of inflation occurs when the costs of production increase, such as wages, raw materials, or taxes. This forces businesses to raise their prices to maintain their profit margins. However, this may reduce their sales and competitiveness, as consumers may switch to cheaper alternatives or reduce their demand. Cost-push inflation can hurt businesses that have low pricing power, high competition, or low profit margins. Demand-pull inflation. This type of inflation occurs when the demand for goods and services exceeds the supply, such as during economic booms, stimulus measures, or supply shortages. This allows businesses to raise their prices and increase their revenues and profits. However, this may also attract more competition, increase costs, or create shortages. Demand-pull inflation can benefit businesses that have high pricing power, low competition, or high profit margins. Commodity and real estate-related industries. These industries tend to benefit from inflation, as their assets and products increase in value along with the general price level. For example, oil and gas companies, mining companies, and agricultural companies can sell their commodities at higher prices and earn higher profits. Similarly, real estate developers, landlords, and mortgage lenders can benefit from rising property values and rents. Technology and innovation industries. These industries can also benefit from inflation, as they offer products and services that are in high demand and can command premium prices. For example, software companies, biotechnology companies, and e-commerce companies can leverage their competitive advantage and innovation to attract and retain customers and increase their market share. Consumer discretionary industries. These industries tend to suffer from inflation, as their products and services are less essential and more sensitive to price changes. For example, car and truck manufacturers, restaurants, and entertainment companies can face lower demand and sales as consumers cut back on their spending or switch to cheaper alternatives. Industries that carry high inventories. These industries also tend to suffer from inflation, as their inventories lose value over time and erode their profit margins. For example, retailers, wholesalers, and manufacturers that stock large quantities of goods can face higher costs of holding and replenishing their inventories. Improve purchasing decisions. With persistent inflation, delaying a purchase can be costly since the price is likely to rise in the future. For example, if you wait a year to buy the washer you need, you may end up paying more for it. Therefore, it may be wise to buy durable goods and essential items sooner rather than later, especially if they are on sale or have low interest rates. Buy in bulk. Some consumers are trying to combat the high cost of food by buying in bulk. This can involve going to a warehouse club like Costco, which has recently seen an increase in sales and membership, or ordering online from retailers like Amazon or Walmart. Buying in bulk can help you save money by getting discounts, avoiding frequent trips to the store, and stocking up on non-perishable items that can last longer. Reduce spending and debt. Another way to deal with inflation is to reduce your spending and debt as much as possible. This can help you free up cash flow and avoid paying higher interest rates on your loans and credit cards. You can reduce your spending by creating a budget, tracking your expenses, and cutting out unnecessary or discretionary purchases. You can reduce your debt by paying off high-interest debt first, refinancing your loans, or consolidating your debt into one lower interest payment. Increase income and savings. Finally, you can also deal with inflation by increasing your income and savings. This can help you keep up with the rising cost of living and build a cushion for emergencies or future goals. You can increase your income by asking for a raise, finding a side hustle, or investing in yourself and your skills. You can increase your savings by setting up automatic transfers, opening a high-yield savings account, or investing in assets that can hedge against inflation, such as stocks, commodities, or real estate.